65% of Bitcoin is not available. It's being held by long-term holders. They're not willing to sell it in the market. And so even though there's more than 19 million Bitcoin in circulation, there's really only 35% of Bitcoin that is available for trading. And so as you get this increase in demand or decrease in demand, it is exacerbated or kind of exaggerated because you have such a small float compared to actually all 19 plus million Bitcoin that are kind of in circulation. And so the reason why that becomes important is as price goes up, you will see that number trend down. It actually hit 70%, I think earlier this year, and it's come down a little bit, or maybe in December of 2023. So 7 out of every 10 Bitcoin in circulation did not move in the trailing 12 months. That's an insane number.
Bitcoin to $5 million per coin is inevitable. It's only a matter of time. That's the latest message out from Bitcoiner Anthony Pompliano. In his latest interview, Anthony broke down why Bitcoin is heading towards a major supply shock. Right now, the vast majority of Bitcoin is held by long-term investors who aren't interested in selling. Currently, 65% of all Bitcoin is essentially locked away by these holders, which means only 35% of the total Bitcoin supply is available. This creates a unique market condition where even minor increases in demand can lead to massive price surges. Since so much of Bitcoin's supply is essentially off the market, any rise in interest or demand can trigger massive upwards price movements, amplifying Bitcoin's upward momentum. Anthony believes that as demand continues to outstrip supply, Bitcoin is poised to break new records, cementing its position as a powerhouse asset for long-term growth. Make sure to stick around until the end of the video to hear Anthony Pompliano as he shares more valuable insights about Bitcoin and the market. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now, here's Anthony Pompliano on Bitcoin's supremacy.
We saw a tightening. Bitcoin dropped from 69,000 down to I think 17,000 as a significant drop in price. Most people in most asset classes would sell the asset, say I'm done with this thing and move on. That's not what happened with Bitcoiners. So if you look today, Bitcoin has fully recovered back. It hit a new all-time high in the low 70,000s, and it's kind of gone sideways, as you mentioned, since March or so. Now, one of the things that people usually don't remember about Bitcoin is in these 4-year cycles, in the halving year, there are two things that tend to be true. Doesn't mean it's always going to be true in the future, but so far, historically has happened. The halving occurs, there's kind of a run up into that event occurring. What we saw earlier this year was not only do we get the run up because of the halving, but we also had the ETF approvals. And so there was a repricing of Bitcoin by about a 50% increase going into those that halving. So ETFs get approved in January, price goes up, halving occurs, and then there's kind of this like disillusionment for the next month or so, where everyone was so excited about the halving, they realized it doesn't really do anything, and so there's kind of a sell-off. Now the sell-off wasn't really that bad, but throughout the summer we have what I call the sideways summer, and usually in halving years, if you go back to 2020, that's exactly what happened. Kind of Bitcoin, recovered from the quick drop in March with the halving in May, and we pretty much went sideways all summer long. And so if you go back and you look, Michael Saylor and MicroStrategy were buying Bitcoin at around the same price as when the halving actually occurred. Call it, $8,500 to $10,000, somewhere in that range. And so if we look at what happened in 2020, we then got into the end of Q3, beginning of Q4, and really it wasn't until the end of October, November, December, we then went from, call it, $8,000 to $10,000 up to around $30,000 to end the year. And that continued into Q1 of 2021, where we went from 30,000 all the way up to 64,000 in March. And so we had a 600% price increase from the end of Q3 until March of 2021. Now, there was a big sell-off. We then went sideways for a while, and then there was recovery to hit the new all-time high of 69,000 at the end of 2021. Why is that important? I think that we are following a similar trajectory in terms of trend. I don't know about severity. So we had the halving earlier this year. We went sideways. We're now getting towards the beginning of Q4. And so towards the end of October, beginning of November, I do expect the price to start to increase. It also will coincide with more rate cuts, and also it will coincide with the election. And so there's kind of a couple of different factors that are coming together that I think will push Bitcoin's price higher. Now, how long will that last? Are we going to go from November to March again? Maybe. Is it going to be a 600% increase? that seems unlikely to me. And so maybe it's something like, hey, it is going to be kind of a 6-month, kind of upwards movement in price, but over that 6 months, maybe we double in price, or we have a 50% increase in price, or maybe it's 150%. I don't know what the exact severity is going to be, but I do feel like a lot of Bitcoin's price movement is much more tied to timing of the year, of the halving schedule, etc., than it is to, oh my God, it went sideways. We need a net new buyer to come in. It's just, we continue to see this pattern over and over again. And there's probably something about the halving takes about 6 months or so to kind of work itself out so that people start to feel that change in incoming supply. And so if you have the same demand, the supply drops by 50%, it works itself out, then bam, here you go. You've got something that seems to be more scarce in terms of that incoming daily supply, and that ultimately leads to the price repricing of the asset, kind of at the end of that year and into the beginning of the next year. 65% of Bitcoin is not available. It's being held by long-term holders. They're not willing to sell it in the market. And so even though there's more than 19 million Bitcoin in circulation, there's really only 35% of Bitcoin that is available for trading. And so as you get this increase in demand, or decrease in demand, it is exasperated or kind of exaggerated because you have such a small float compared to actually all 19 plus million Bitcoin that are kind of in circulation. And so the reason why that becomes important is as price goes up, you will see that number trend down. It actually hit 70%, I think earlier this year, and it's come down a little bit, or maybe in December of 2023. So 7 out of every 10 Bitcoin in circulation did not move in the trailing 12 months. That's an insane number. Only 3 out of 10 are available for trading. Now, as price has moved up, we've gone from 70 down to 65%. So it's still pretty healthy, but by the end of the bull market, that number will go from 65 probably down closer to like 55 or 50%. And so what people are doing is as price rises, you can think of it as it's a daily bid for their Bitcoin. So right now, somebody is saying, I'll buy your Bitcoin for $63,000. 70%, 65% of people say, I'm not selling. But all of a sudden, if somebody says, I'll pay you $80,000, one more person than probably right now will say, you know what, $80,000, I'll sell you the Bitcoin. Then $90,000, $100,000, $110,000, $120,000, $130,000, $150,000. There's some portion of the people who are not willing to sell at 63 that are going to be willing to sell at $100,000 or $150,000. And so that number will start to kind of trail down. What's fascinating to me is still more than 50% of all Bitcoin in circulation has not moved in 2 years. So the 1 year number is impressive because during that time period, what we saw is Bitcoin's price has gone up substantially. But over the 2 year time frame, Bitcoin's price has tripled. So we went from, kind of sub 20,000 to over 60,000 in a 2 year time frame, yet 1 out of every 2 Bitcoin has not moved. Now, some portion of those are lost. We don't know how much. I don't think it's as high as the number as some people think it is, but some portion for sure is lost. But 1 out of every 2 Bitcoin has not moved in 2 years, even though the price has tripled. Those are long-term holders. Those are people who are saying it's going higher, right? They're expressing their view in the market because they're not willing to sell at these prices. And so that is a huge reason why I think some of the best investors in the world, like the Paul Tudor Joneses, the Stanley Druckenmillers, etc., are so excited about Bitcoin, is because they realize these people are nuts. They're going to hold the Bitcoin. They're going to make it a much less liquid supply, and therefore increases in demand like an ETF are going to skyrocket the price. Now, what's fascinating to me is the ETFs are also a net new buyer of Bitcoin, and they're holding it. Yes, there is a redemption feature, so they can have to sell Bitcoin from time to time. But what we see so far in the data is they are usually a net buyer, not a net seller. And so as Bitcoin goes into those funds, it usually doesn't come back out. And so if that continues to happen as well, they're just pulling supply out of circulation. They're holding it in their funds, and that should continue to lead to higher and higher prices over time.
Anthony explains that historically, Bitcoin follows a 4-year cycle driven by the halving event, which reduces the supply of new Bitcoin entering the market by half. Leading up to the halving, there's typically a price run-up, as seen earlier this year, fueled not only by the halving, but also by ETF approvals, driving a 50% increase. However, after the initial excitement, there's often a sideways phase where the price stabilizes as expectations temper. This sideways summer pattern is something he notes has happened in previous halving years, such as 2020. Anthony expects Bitcoin's price to start rising towards the end of Q4, potentially aligning with rate cuts and the upcoming election. Now let's go back to Anthony Pompliano and what he has to say.
Most people think that money wants to find where is it safest? Where is it going to be kind of cared for best where I can't lose it? That's not what happens. Usually what happens is that investors are risk takers. They want to find risk. But the best place to take risk is when you take risk in a crowd. And so what they see is that the Bitcoiners are maniacs. They're like, these guys buy this thing, and it doesn't matter if it goes up hundreds of percent, if it drops 90%, they just hold. And so when you have a massive group of people, and remember, we're talking about hundreds of billions of dollars worth of Bitcoin not moving regardless of where the price goes. As an investor who wants to seek and capture risk because the risk you take is the return you earn, then you want to go find places like this where you are alongside, shoulder to shoulder, other maniacs. And so I think that's where people kind of get it confused. They think that Wall Street's going to run away from this asset. Wall Street likes volatility because volatility means there's potential return. Wall Street likes risk because the more risk they take, the more return they can capture. Wall Street likes the maniacs because every person on Wall Street is a closet maniac. They're just trying to do it inside of an institution with risk management, etc. And so Bitcoin was almost purpose built for resonating on Wall Street. It's just that in the early days, a lot of those financial institutions couldn't adopt the asset. But now they look at this data and they say, you're telling me if this asset drops 80 to 90%, these guys don't sell? They just buy more? Sign me up. How do I buy some of that? And I know this because literally Stanley Druckenmiller and Paul Tudor Jones have gone on CNBC and explicitly said that after the 2018 crash, they called each other and they had a conversation. And they said something like, did you know that 70% of the people who held Bitcoin at 20,000 are still holding it at 3,500? They said, I got to get me some of that. Let me go find the maniacs. Let me invest alongside them. That's how they got into Bitcoin. And obviously that worked out very well for them. I think people are realizing with the rise of AI that the single most valuable commodity in the world is computing power. And I've said for a long time that people think it's oil or they think it's something else. It's computing power. And so Bitcoin is the strongest computer network in the world. And so when people say Bitcoin's not backed by anything, it is backed by something. It's backed by the strongest computer network in the world. How valuable do you think that is in today's day and age? It's pretty damn valuable. It's worth more than $1 trillion for sure, right? And so I think that when people start to understand this currency is backed by a commodity, the commodity is the most valuable commodity in the world, they are starting to realize, wait a second, maybe I should get some. And so if you start to look at kind of that argument, you then say to yourself, well, how much bigger and stronger is the Bitcoin network? If you take all of the computing power of Amazon's AWS, Google Cloud, and Microsoft Azure and combine it, Bitcoin is multiples bigger than those three computing networks combined. And so it's hard to fathom just how big the computer network is, how strong it is, how decentralized it is, how resilient it is. And so not only is it a valuable commodity, it's also the greatest form. Think about if I said to you, a bunch of people around the world came together and they created something that's never been created in human history before. They created the strongest computer network ever invented by humans. And I said to you, what would somebody be willing to pay for that? And you told me $1 trillion, I'd laugh at you. And so I think that's what people are starting to realize is this is going to be worth a lot more. How much, when, it's all up for debate. But $1 trillion for a price tag of the strongest computer network in the world is probably too low. And I think that's where you're starting to see a lot of people say, okay, you know what? Maybe it is backed by something. Maybe there is something here that is kind of driving, the value, not just the price. And it took the explosion of AI, the return of data centers and computational power and all of that stuff to then convince people, wait a second, this is a computer network. This is data centers all around the world. This is something that I can just go and buy, kind of in the open market. And so maybe I should get some. I think that Bitcoin's computational network is doing the single most important computational work in human history, which is it is protecting economic value. There is nothing else in the world that protects economic value like this. And so in a world that is littered with central banks and governments who have spending problems, who have national debts that are exploding, that are devaluing their currency, who are punishing 50+% of their populations and pushing them into poverty, and they're eating away at your economic value, they are essentially stealing from you. It's a silent tax, It's a silent theft. But if you think about the McDonald's worker who's been getting paid $12.50 an hour since 2012, they think they're still getting paid $12.50 an hour. They're getting paid less and less every single year. Don't even worry about the last decade. Just go since 2020. The purchasing power of the US dollar is down more than 25%, depending on which estimate you look at. So that means that for every dollar that you had in 2020, today you can buy 75 cents worth of goods and services. They stole 25% of your purchasing power. How do you protect yourself? Bitcoin is not the only solution. You can buy real estate, you can buy gold, you can buy a lot of different assets. But Bitcoin is the best at doing it over a long period of time so far. Now, it's an early experiment. It's only 15 years old. It's still got a lot of time to go. Gold's thousands of years old. Real estate, obviously, very old as well. But Bitcoin is probably one of the most promising ones as well, because if it continues to get repriced by the world as the best asset to protect economic value, one of the things that I think finance people have a harder time kind of wrapping their head around compared to maybe the tech people is, what are the implications of this? And so if I said to you, if the root cause of poverty around the world is the fact that there are billions of people who earn economic value every day, they leave it in cash, whatever their local currency is, and their government devalues that currency, and so they fall further and further behind, they can't get ahead, the wealth inequality gap widens, and these people get punished. But there's a solution. They simply can save that economic value in a different currency. That currency can't be devalued. It can't be created out of thin air. It's not controlled by anyone, and it's going to protect their economic value and their purchasing power. All of a sudden, it's not very hard to see a world where maybe this one asset could actually lift people out of poverty, could actually have this global impact that would change the lives of billions of people. Now, there's a lot that has to happen between here and there, but I think that's part of the promise of Bitcoin and why so many people are excited about it, is they say to themselves, wait a second, is this a root solution to a problem that has been around for centuries?
Meanwhile, Bitcoin's market capitalization has surged to $1.35 trillion, creating a lead of over $1 trillion compared to Ethereum. This significant gap has fueled bullish sentiment, with Bitcoin recently trading above $68,000. Marking its highest level since July. The rise in Bitcoin's value, up 8.9% since mid-October, has sparked speculation that there's still plenty of upward momentum ahead for the cryptocurrency. Glassnode's lead analyst, James Check, noted that this spread between Bitcoin and Ethereum is a new all-time high, reinforcing Bitcoin's dominance. While Ethereum's market cap stands at $318 billion, Bitcoin's surge continues to attract attention from both analysts and investors. Some experts, including Bitcoin maximalist Fred Krueger, are predicting that Bitcoin's market cap could grow exponentially, potentially reaching $5 million per Bitcoin by 2040. As Pompliano mentions, Bitcoin tends to follow a pattern of price increases after halvings in key market events, and the current $1 trillion lead over Ethereum demonstrates Bitcoin's strength and potential for huge gains. With factors like institutional backing, ETF approvals, and Bitcoin's limited supply, Pompliano's optimistic outlook aligns with the belief that Bitcoin's rise is just beginning. Anyway guys, before we go, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis. Trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it provided you with some value. I'll see you all in the next one, and as always, all the best.